Subscribe to my channel Report Stock.
Okay, let's unpack this. Today, we're not just looking at any company. We're really examining a key player in, well, maybe the biggest technological shift of our lifetime, artificial intelligence. We're diving deep into the latest financial pulse from NVDA, that's NVDA with their fiscal second quarter of 2026 results. Their fiscal calendar often runs a bit ahead, so this covers the period roughly ending July 2025. We also have some truly fascinating analyst insights to dig into. The world of tech moves at, well, an astonishing pace. And honestly, trying to understand the core developments and separate the signal from the noise, it can feel like a full-time job. Our mission here, as always, is to cut through that noise for you, pulling out the most important nuggets of knowledge from the sources we've gathered about NVIDIA's recent performance and, crucially, their future outlook.
Yeah, and what's truly fascinating here is how these quarterly reports, especially from a company like NVIDIA, they aren't just about financial health, right? They offer a critical, almost prophetic window into the broader trends shaping our technological future. NVIDIA plays such a pivotal, you could argue foundational, role in accelerated computing and AI. So understanding these results helps us connect those dots for you, really revealing the powerful undercurrents of the entire industry. It's about seeing where the digital world is headed, not just, where it's been.
Absolutely. And when you look at the raw numbers, the story starts strong. Let's hit the headlines straight from August 27th. NVIDIA Corporation released its FQ2 2026 results, and they didn't just make a splash, they caused a tidal wave. The company blew past Wall Street's consensus for revenue by a staggering $609.1 million. Huge number. And for earnings per share, that's the portion of a company's profit. For each share, they beat expectations by a solid $0.04. That's a powerful showing, and it immediately sets the tone, wouldn't you say?
It absolutely does. Exceeding consensus by those margins isn't just a modest win. It signals exceptionally robust operational performance and, frankly, incredibly strong market demand for their products and services. For Wall Street, this is often the first, maybe the most powerful indicator they look for. It tells the market that the company isn't just performing well, but actively outperforming even optimistic expectations. This kind of consistent beat builds significant investor confidence and really reinforces their market leadership.
Here's where it gets really interesting, though, and what I found most striking in our materials. What was the true engine powering this phenomenal growth for NVIDIA? Our sources point directly, unequivocally, to the data center revenue. This wasn't just a minor contributor. It was the primary, almost singular force behind it all. Data center revenue reached an astounding $41.1 billion. That marks a significant 56% year-over-year growth. Now, for a company of NVIDIA's scale, that's not just growth. It's an incredible, almost unprecedented acceleration. What does a 56% leap in that segment really tell us about the underlying demand? Is it purely the generative AI boom we hear so much about, or are we seeing broader enterprise adoption driving this?
That's a crucial distinction, actually, because it's likely both, and the interplay is fascinating. If we connect this to the bigger picture, that 56% growth in data center revenue is incredibly telling. Why? Because it highlights a fundamental shift in computing architecture. NVIDIA is, at its core, a computing company, but more specifically, it's focused on accelerated computing and advanced graphics. Their chips, the GPUs, they're not just processors. They are highly specialized parallel processing units. Indispensable, really. They are the backbone for AI training, high-performance computing, and the massive cloud infrastructure that powers, well, so much of our digital world. Our sources highlight that this isn't merely about more servers. It's about a complete re-architecture of data centers globally. So this growth isn't just revenue. It's a testament to the exploding demand for the very technologies NVIDIA specializes in, particularly as AI adoption scales, everywhere. It underscores their critical position as the provider of the infrastructure upon which the entire AI revolution is being built.
And when we talk about that accelerated computing, it's not just a buzzword, is it? There's a real technological advantage implied there.
Precisely, yes. Our sources reveal that NVIDIA's CUNE platform, for instance, isn't just hardware, it's a whole software ecosystem. Comprehensive. It makes their GPUs incredibly easy for developers to program for AI tasks. Think of it as the operating system for AI, maybe. This combination of powerful hardware and a robust, widely adopted software framework creates a significant barrier to entry for competitors, a real moat. It's why their chips are seen as the de facto standard, the indispensable backbone for training and deploying AI models across the cloud. This synergy between hardware and software is a key reason for their market lead. And it makes that data center growth so significant, it represents what some analysts call infrastructure capture.
Infrastructure capture. I like that phrase. It really suggests a deeply entrenched position, doesn't it? So, okay, what does this all mean for what's next? Management is looking forward, obviously, and their expectations for the fiscal third quarter of 2026 sound equally compelling. The company is projecting fiscal third quarter revenue to be approximately $54.0 billion, give or take 2%. And here's another key detail that caught my eye. They're projecting GAAP gross margins around 73.3%. For anyone maybe less familiar, that's their profit margin after the direct cost of making their products, but before operating expenses. For a hardware company, that number is, well, it's exceptionally strong. What do these projections and the consistently bullish Wall Street sentiment tell us, especially regarding those margins?
Well, this raises an important question for investors, right? What do these projections and analyst targets truly signify? High GAAP gross margins, like around 73.3%. That's almost unheard of for a company of NVIDIA's size that deals primarily in hardware. It really is. This isn't just efficiency. It signals an incredible economic moat. It means they're not just selling products, but essential solutions for which there are few, if any, equally powerful or frankly, cost-effective alternatives right now. Our sources suggest this substantial margin allows them to continually out-invest competitors in R&D, research, and development, which just solidifies their lead in the next generation of AI. The consistently positive analyst sentiment and ambitious price targets, like that 12-month average of $200 reflecting, a 10.13% upside, is just a firm belief in NVIDIA's continued market leadership and growth trajectory. Especially within accelerated computing and AI sectors, they see the momentum continuing. You saw Stifel Nicholas analyst Ruben Roy maintaining a buy rating with a $212 price target just the day after these results dropped. That tells you something.
Yeah, it really does. It's easy to get swept up in that NVIDIA narrative, and it's clearly a powerful one. But what about potential headwinds? Or, any specific caveats mentioned in analyst reports? According to our sources, are there any indications that this isn't a completely smooth ride ahead?
That's a very fair question. And why the overall sentiment is overwhelmingly positive, our sources do implicitly acknowledge some things. NVIDIA's sheer dominance and those high margins could, maybe in the long run, invite increased scrutiny from regulators. That's always a possibility with market leaders. Or it could intensify competitive efforts from other chip makers, AMD, Intel, startups who are undoubtedly pouring resources into challenging NVIDIA's lead. However, for the immediate future, the momentum from the AI boom combined with their strong tech and that CUDA ecosystem we mentioned seems to outweigh these concerns for now. The analysts are, for the moment anyway, betting on continued strong execution and, massive market demand.
Right, the demand seems unstoppable currently. Now, as impressive as NVIDIA's story is, our deep dive wouldn't be complete without looking at the broader AI investment universe. Our sources remind us that the AI market is vast, and there are other intriguing narratives unfolding, even if they aren't generating the same headlines as NVIDIA. While NVIDIA's performance is clearly impressive, our sources also touch upon that wider investment landscape in AI. It's important to look at all sides, right, when assessing potential.
Indeed. And look, to maintain an impartial view here, while we acknowledge the significant potential of NVDA as an investment, our sources do point out that some analysts, some investors, believe certain other AI stocks might offer different risk-reward profiles, maybe with greater upside potential from a smaller base, or perhaps carrying less downside risk for various reasons. This perspective exists, and it's important to understand why. These alternative companies are often described as AI stocks that stand to benefit significantly from what are sometimes referred to as Trump-era tariffs. Those duties on imported goods and the onshoring trend. That's where companies bring manufacturing and supply chains back home, often for national security or economic reasons.
Okay, so we're talking about specific economic and geopolitical tailwinds that could favor a different type of AI company. Can you elaborate a bit on what kind of companies those might be, or what kind of upside they might offer that's, distinct from NVIDIA's growth story?
Absolutely. So our sources suggest that while NVIDIA is this colossal force, some investors are actively seeking out, say, smaller, more agile AI software companies, maybe ones specializing in niche applications, or perhaps specialized component providers that aren't directly competing with NVIDIA's GPUs, but are still essential to the broader AI infrastructure. Think specialized memory or interconnects, perhaps. These firms, maybe with lower capital expenditure requirements, might offer a different risk-reward profile, potentially allowing for higher percentage growth from a smaller base, you see. Or they might benefit from specific software breakthroughs without the heavy hardware dependency. And specifically, regarding that tariffs and onshoring argument, these alternative AI companies might be ones focused on domestic manufacturing of chips or AI-specific hardware. Or maybe their supply chains are just less exposed to global trade tensions, making them more resilient to geopolitical shifts. Or perhaps they're providing AI solutions for sectors deemed critical for national security, which could mean significant government support or contracts that don't directly benefit the global giants in the same way.
That's a crucial distinction. It really highlights that the AI gold rush isn't just about the biggest pick and shovel provider, right? It's also about the specialized prospectors and maybe the local suppliers. Our sources also hinted at various reports, things like best short-term AI stock or 11 hidden AI stocks to buy right now.
Yeah.
What's the overarching message or strategy these types of reports suggest? Is it just chasing hype or is there something more substantive?
Well, what's clear from reports like those is a strong and I'd say active interest in AI applications beyond just the obvious mega cap players like NVIDIA. These reports often highlight companies in areas like autonomous systems, advanced robotics, maybe specialized data analytics platforms, or AI-driven cybersecurity. These are sectors that might fly under the radar of mainstream investors who are hyper-focused on the biggest names, but they represent significant, albeit sometimes, yes, more speculative growth opportunities within the AI landscape. It's a reminder that the AI market is incredibly vast and diverse. There are various factors influencing different companies in different ways, and there are always new waves of innovation bubbling up beyond the current leaders. It's a bit like the Wild West of the tech world right now. Everyone knows there's gold, but not everyone agrees on where the biggest veins are, or even what kind of picks and shovels you will need next year.
That's a great analogy. Okay, so to wrap up for you listening, you've just gotten a deep dive into NVIDIA's FQ2 2026 results. We've explored their robust performance, driven powerfully by that data center growth and their unique architectural advantage. We had a peek into their bullish future outlook from both management and analysts, underpinned by those incredible gross margins. But we also tried to expand our view to the broader, more complex picture of the AI investment world, acknowledging that there are many different avenues for growth and potential within this sector, driven by a whole variety of technological and even geopolitical factors.
So, what stands out to you from today's deep dive? That's the question to ponder. As you consider the rapid advancements in AI and accelerated computing, think about how companies like NVIDIA aren't just reporting numbers. They are actively shaping the very infrastructure of our digital future. How do you weigh their established market leadership and incredible momentum, which is, let's face it, currently unmatched, against the emerging opportunities and different risk profiles presented in other parts of this incredibly dynamic sector? It's a fascinating challenge to navigate, and one that will undoubtedly continue to evolve. Keep exploring, keep questioning, and keep connecting those dots.
Subscribe to my channel Report Stock.